A very good morning, it's Mark here. It is going on 10 a.m. Eastern, going on 3 p.m. GMT. That today, just bear in mind, being a public holiday in the US, Thanksgiving Day, markets are closed. That means a bit of illiquidity, a little bit thinner the markets, which could lead to some volatility. So just be aware of that. US dollar index. There's the little green candle or a doji, not much. In other words, tried a bit higher, tried a bit lower today, but pretty much back where it started. A little gap up to start. The trading between on the downside 106 support, which is held up, and 106.50, which is the intraday resistance for now. Let's zoom in on the hourly. It's sitting right in the middle of that 106, 106.50, not giving much direction as yet. Although a little different today because it is a public holiday, but what we have seen most of this week is weak US dollar to start the day, and then into the US session, we have seen the US dollar come back and strengthen towards the end of the day, but today could behave differently. Let's have a look at the S&P 500, again, bearing in mind the markets are closed today. And I think you can see very little activity, sitting at 6,028. Buyers looking to get above 6,050 up to that resistance, and buyers are protecting that 6,000 level, a level which sellers will want to come below and at least test. Today might not be the day. Let's have a look at gold, which we saw yesterday strengthen. There it's coming down on the hourly, but I have an idea the daily will look a little different. There you go. Last 3 days, small green candles, gold trying to fight its way back from this support at 2,600, looking for 2,700. We saw the big sell-off on Monday. Tuesday, Wednesday, today, small little green candlesticks, trying to get higher, but it's kind of stuck around that 2,630, 40 level for now, not making much headway as yet. If I zoom in on the intraday, there you can see got as high today as 2,650, as we said, but coming down as we speak, sitting now at 2,640, and sellers will try to bring it down closer to 2,600. Oil. Let's get Brent up. Let's start with the daily and have a look at yesterday's activity. Yesterday was pretty flat. There's that doji. Not much happened. A little bit up today, but still pretty flat, as you can see. Little strength, if anything. I put in this descending trend line on the shorter time frames. Let's go to the 4 hourly. I had that in, but you can see it has broken above. Buyers will look to maintain and to keep price action above this trend line, and the 72.50 looking for $73, where sellers are going to look for a bounce down from these levels, at least get to this descending trend line and see if it can come back to 72 on the way to possibly testing lower. And crypto, after a strong fight back yesterday, let's get to the daily. There's the strong fight back yesterday. I put in quite a few lines here. There is on the big picture, a descending trend line. Looking for price action not to get above this descending trend line, not to get much above 95, 96,000, and possibly come down and test these lower numbers below 94, 93. If I go to the hourly, what I did in here is there's that descending trend line I had on the daily. On the hourly, I did join these up earlier this morning, but you can see it has already broken a little bit above there, but sitting at 95,400. And looking, sellers will want to come back below this descending trend line. Again, just to go to the daily to put things in perspective, we're pretty much where we closed yesterday. I think buyers are going to have a tough time getting back to these 96, 97, 98,000 numbers. The bias does look a little bit down for me. I've put in this 95,000 as kind of my halfway mark. Buyers are going to want to keep prices, I believe, above 95,000. Hopefully looking for some kind of a rally to come up and test the 100,000 mark again. Sellers will want to keep prices below the 95,000 to that 94,500 one time look kind of pivotal, and see if we can break below those levels, come back towards the 92, 91,000. Good trading, guys.